Hello, income harvesters and growers. Welcome back to the Harvesting Income channel. I got a very good response for the one of the previous videos on QDTE. It's one of the popular ETFs, which is into Nasdaq 100 covered calls. And the beauty about that is they are also offering weekly distributions, which is pretty attractive. Not only the frequency of the distribution, but the yields are also pretty attractive. However, there is an issue that it's more volatile and it's also sometimes tends to lose value over time. So it's more or less like battling, rapids to collect that weekly distribution or weekly paycheck. So that's the reason, I covered that video, talking about that aspect that it is highly volatile, highly susceptible to market fluctuations. Today I'm going to talk about QDTE and its ability to maintain its NAV. People who bought QDTE around $40 or higher probably are worried about whether it will recover to the $40 levels again or not. But I'm just going to give you an overview. And if you're not familiar with this fund, I will quickly take you through the fund, briefly about the main features, plus also show you the performance with respect to how it performed versus the Nasdaq index. So let's quickly look at the fund. This basically is the QDTE is the bigger symbol. The name is Roundhill Innovation 100 Covered Call Strategy ETF. It basically holds the whole Nasdaq 100 stocks. It may not be exactly matching with the index, but it's more or less the same stocks held by the fund, and they write covered calls. The way the covered calls are written is a little different. They write every day, meaning that every day the calls are written. The call expires every day, which means the fund is basically collecting premiums every single day. Every single trading day. So that way they are able to generate regular income. However, bear in mind that the fund cannot make profits every single day because every trade cannot be 100% perfect. So there would be days where they might lose money, but overall they make more money when compared to the losses. So overall net net they would be making those profits, and that enables the fund to generate regular income. However, keep in mind that the fund is investing in Nasdaq 100 stocks. So how does the fund's value get impacted? That is impacted by the movement of the Nasdaq index or the components of the Nasdaq index which moves the Nasdaq will also move this fund in the same direction. Like it could be up, it could be down, either way. So that's something you need to understand. If you are comfortable investing in the Nasdaq components or the Nasdaq stocks, then this fund is something that you need to consider. But this is more aligned to an income-oriented investor strategy, basically income-oriented investors. So you could be a pure income-oriented investor, or you could be a hybrid kind of person who want to invest more for income and a little bit of capital gain, or you could be having your portfolio 50% income, 50% growth, like whichever combination you have. If you have an interest in earning that income, probably this fund is an option at the moment. However, people who invested back when it was in a higher level are probably worried about the fund losing its value. Okay, so let me quickly take you through the fund for those who are not familiar. So if you're already familiar, you can skip this section. This is the QDT Innovation 100 Zero DTE Covered Call ETF. So this basically uses something called the zero days to expiry, zero DTE options on the Nasdaq index. So they call it the Innovation 100 index. It's basically the Nasdaq. And the fund seeks to provide overnight exposure to the 100 index and generate income every morning by selling out of the money zero DTE calls. So the fund is generating money by selling out of the money calls on the index. So out of the money calls generally tend to expire, worthless. There are some cases where the out of the money calls also can get exercised, or the fund could write some calls, I'm sorry, which can lose value. Let's say the Nasdaq rallies and the strike price gets hit. So in that case, the fund sold at this price, but the Nasdaq went above that price. In that case, they might lose a little bit of value. So that's the challenge that the fund is facing. That's one of the challenges. The other challenge is like when the Nasdaq is moving down a lot. So the net asset value has to come down accordingly, like in proportion to the index falling down. So, so that's how the fund works. It's an actively managed fund, and they provide weekly distributions. So, using the covered call strategy, they are able to generate the income. So, these are the basic information. Ticker is QDTE, and they have a gross expense ratio of 97 basis points. Assets under management is 935 million, so it's a pretty huge fund. It was launched in March 2024, so now it's September 2025. Like they have more than 2 years of track record right now, so it has a decent history to go by. And yeah, their holdings is mentioned here. Like you can go through the holdings later. This video we will not be covering that. You can look at the price, like $35 and so on. Like if you look at the price chart, like I will show you the price chart here. Currently, it is at $35. And if I look at it 1 month ago, it's almost down by 8 tenths of a percentage. No, this is in the last 1 month. Previously, it was around 35, 44. If I look at it year to date, that is from January to September, 2025. We are around the mid of September. So here we are seeing that it was at 39.67 the beginning of the year. It also touched 40, multiple times at the beginning of the year. Um, and then it had a massive fall around February and again once again in around April. Obviously, markets were down in the April month, so after that it has come up a little bit and it has come up nicely after some time and recovered in May, June, and later on it's stabilized around the 33, 35 levels. It's keeping moving up and down in that same range. Not much of a change after June. Let me look at the 1 year. 1 year performance, it's fallen by about 15%. So that's very disappointing if you had invested somewhere at this point, like December 2024. It's highly disappointing. I have faced this kind of situation in one of my previous funds too. Like I don't want to name that. Um, the reason this happens is because sometimes because of the hype or because of the media or because of the news or attraction, sometimes you get impressed with one fund and you put a lot of money into that and a few months later you never know that it's going to fall off. Like a few months later it's falling off, and you know what, after that you see a 10% loss, 20% loss. It's almost like you want to give up and move on to the next thing. Like so if you had invested somewhere around this 43 level, you imagine you lost around $8 from that level, like almost like you lost 20% of your capital. Would you be happy to continue with that? Like it's disappointing. Like if you're invested at this level, it's highly disappointing. The only answer to that is if you're a long-term investor, you hope and wait and pray that it recovers. But the real answer or honest answer to that is like you need to wait for a fund to perform, at least wait for a year for any new fund to perform. I know it sounds a little boring, but if you still think that you want to invest in that, just be prepared for these kind of volatility, these kind of situation. Like you need to be prepared for that, or be patient, wait for at least 6 months. I will instead of 1 year, you want to check for 6 months and then go ahead. That's okay too. But you want to check the track record, see the performance, and then move ahead. So when I look at the 2 years, like maximum is 2 years, roughly 2 years something. So it's about 22.9%, drop. from the date of inception in March 2024. So at that time, in March 2024, it was around $45 something. It was between 45 and $46. And imagine the state of people who invested in March 2024 at $45. They have lost a big chunk of money. They have lost almost like $10 on 45. It's like close to losing like 20%, like roughly. So that's disappointing. Like if you even if someone had invested above 40, like they're now, I mean, asking the question like, will it really recover to the $40 levels? Okay, I try to answer them. Like I try to give my insights, but my honest answer was like, there's no way to predict where this will go. Like, so if this has to recover, the only way is for the Nasdaq to rally 10% or 20%, so that way you can recover your investment back. Or you have to wait for the long term to see that appreciation in the price of companies and the index as well. That's the honest but boring answer. The other way you can look at it is, for a new investor, obviously this is an attractive time because you are buying pretty low. So if you are taking a fresh investment, this is a good. I mean, this could be a good time to make an entry. But for someone who is holding the bag, like it's disappointing. The only way you can recover is like you can average down, which I don't recommend. Like if you feel you're confident about the index and you have other stocks and other stuff in your portfolio which is doing well, so and you have some extra cash, you may want to pick a little bit at a slightly lower price and gradually, reduce your cost and increase your income. If you are an income-oriented or hybrid investor who wants to increase your income, but if you are not, the only way is to wait for that to recover. So will that recover to top levels? We don't know. But let me quickly take you through the fund once again, the other details. Um, the distribution rate, it seems to be close to 29%. This is only the distribution, not considering the capital part of it. And we'll have to check the calculations. This is what is reported by the fund. So when I look at the distributions, it's like the recent one is like 20 cents. The payment is scheduled for September 12th. Yeah, 20 cents. And previous week, September 5, it was 28 cents. And August 29, it was again 20 cents. So more or less it's in the 2023 range, but sometimes it's higher, sometimes it's lower. And there's no consistency in the when you look at the June 13, it's about 14 cents. Yeah, so it's not consistent. If I look at the graph too, like if I go down, I look at the graph, it's like more or less in the 20 to 25 cents range. But sometimes it's too low, and sometimes it's pretty high, like 30 cents here. And you see this 28 cents here. Like so it's not consistent. Like if you look at the 2025 dividends or distributions, it's not that consistent. So but one thing I can say that they are not distributing too much in the recent times. So that helps in stabilizing the NAV. And let me look at the performance of the fund versus the index to give you the right picture. So when I look at this one, the dividend channel, they compare these two figures. Okay, let me expand it a little bit so that you can see it clearly. So I hope that is clear now. Okay, so QDTE versus QQQ. So this would be the main part where you will get the real picture, how the fund performed versus the index. Okay, we are talking about the start date of March 2024 because that's the time the fund was launched. And QQ is the index, this is the NASDAQ. So from that point to now, the starting price of QDTE was around 46.44. Now it's come down to 35 something, 35.15. So obviously there is an erosion of capital. Whereas if you look at the index has gone up from 445 to 580. So this is one of the drawbacks of covered call funds. Sometimes the fund can lose money, and especially when the markets have come down, they have lost money. But that lost money cannot be recovered because once the net asset value comes down, for the net asset value to go up, it has to move in tandem with the index. It cannot move in tandem with the index because the covered call caps the upside performance. So once it has dropped down, when it wants to move up, it can only move up a little bit because the strike price hits and caps the upside movement. So due to that, these funds actually tend to reach that point where they're not able to, you know, go up further. But there is a chance of, the fund to move up a little bit if there is an overnight increase in the value of the index. So the fund benefits from overnight exposure to the upside of the index, and the next day they could write calls and still make that income. But it's difficult to say how it will happen. But if the index remains a little bit flattish and moves up a little bit slowly, it could recover. But there's no guarantee. Even what I'm saying is subject to a lot of moving parts, and I'm not an expert. I don't have a crystal ball to predict what will happen. But it seems that if there is a good amount of overnight upside in the index, probably it can help in the movement of the net asset value. But as long as you have the covered call, the movement of the fund value on the upside will always be limited. Okay, let's quickly go through the numbers instead of debating on that. Uh, okay, the share price has fallen, net asset value has fallen. Okay, total return is 27.5 for the fund and 31.5 roughly for the index. This is with respect to dividends reinvested. So if you started with a 10,000 capital, you ended up with 12,750, just to round it up. But in this case, you make 13,150 roughly, 13,146. So it's basically you're making a little more, significantly higher with the um, Nasdaq. But let me check if this is that significant, because if you look at it, it's like 31.5 and 27.5, roughly 4%. So it is significant. It is significant, but keep in mind that any covered call fund will underperform the index. How much the underperformance will be and if that is good or bad, it's a subjective topic. But let me quickly compare like how much these two are correlated with respect to the dividends reinvested. Okay, 31.50 is the return on the index. So between 27.5, 27.50 divided by 31.47 times 100. So that's 0.87, 87% something correlated. 0.87 correlation. So which means like it's almost like close to zero point 0.9, like it's almost zero point 0.9 correlation with the index or 90% correlation with the index, roughly 87% to be more precise. So I don't think it's a big deal for, in my view, I don't see that as a big deal. But I don't know what's the industry standard, like how you measure it. But even according to the industry standard, covered call fund is expected to underperform the index because they have an upside cap. So I don't think it's a major deal breaker. But if you think you need more returns or capital growth, then obviously QDTE is not going to help in that respect. It's more of a dividend or cash flow generation vehicle. Let me look at the second comparison. This is without dividends reinvested. Here you can see a massive difference. 10,000 grew to 12,040 and 10,000 grew to 13,130 here, and 13% roughly versus 19.8%. So what's the difference here? 1977 minus 13.09. 6.7% roughly is the difference between the returns. That's pretty massive, and this is something you don't want to see in your fund. Let's say you invested and you're not able to reinvest your funds. You want to see the fund growing by itself and also the dividends coming in regularly. This kind of return is not, sufficient, and it doesn't match your requirements. You want to see returns which are actually closer to the index. So if you're someone who is not going to reinvest the dividends, it's not going to be an attractive proposition. So that's the negative point here, and you can see the net asset value has come down. So, so these are the drawbacks or issues with the fund, and covered call ETFs have their limitation. So So with that, let me just conclude that QDTE is a great option for people who are looking for regular income, and even for hybrid investors who want to boost their income. And yes, there will be periods of high volatility and high, downside risk in the index itself falling down, and that leading to the erosion of NAV. So if you are prepared for that, then this is a good option. And when that downside, or when that price drop happens, it's going to take a longer time to recover, because covered calls have the strike price which caps the upside. So keeping that in mind, tread cautiously on this ETF QDTE, because although you are getting the dividends every week, also keep in mind that if there is a dramatic fall in the Nasdaq, it is going to take a little longer to recover. However, if you are a long-term investor, you are willing to hold for the long term, and you're okay with the regular cash flows coming in, you like the dividend distributions, and you don't mind the capital erosion, then this is a good option for you to look at. I hope you like the video, and also check out my previous video on QDTE, where I explained the fund is like a rapid, adventure. So if you like this video, please share it with your friends or family, and also drop in your comments or questions or feedback. Thank you. Happy investing.